Good day, everyone, and welcome to our Kodiak Solutions webinar on 5 healthcare unclaimed property compliance trends you need to know. My name is Matthew Lyon. I'll be serving as your producer on today's program. And before we hand things over to the team, we do have a couple of items we'd like to cover with you. As you go through today's program, I really want to encourage you that the best way to get the most out of the time you spend with us is to share questions and comments you have at any time during the broadcast. We'll be monitoring for those. We'll try to answer some of them behind the scenes as part of today's program, but any questions that go unanswered will be handed over to the team so they can follow up with you outside of today's program. Now, the most common question we do get from attendees is, how do I download a copy of the slides? So let's go ahead and address that one. You'll find a PDF copy of the slides waiting for you in the resources area. Details on our presenters can also be found there, upcoming events, and more items connected to today's topic that we think you're going to find beneficial. So please take a moment and check those out. Did want to note a quick disclaimer. The information provided herein is educational in nature and based on authorities that are subject to change. You should contact your Kodiak advisor regarding the application of the information provided in your specific facts and circumstances. Now, with all of those items behind us, we want to welcome all of you to our Kodiak Solutions webinar today on 5 healthcare unclaimed property compliance trends you need to know. It's my pleasure to hand the session over to the first of our presenters, Jason Higginbotham, a vice president with Kodiak. Jason, over to you.
All right, thanks everybody for joining us today. I know you're excited to talk about your favorite topic of unclaimed property. Today's webinar is titled Top 5 Unclaimed Property Compliance Trends. Before we dive in, I figured we'd go ahead and introduce the speakers really quickly. I'm Jason Higginbotham. I'm a vice president at Kodiak. I help lead our unclaimed property team here. I'm based out of our Indianapolis office, and I've been with the same team for 16 years. This is all I do all day, every day. I live, breathe, and eat unclaimed property. So very excited to present this to you today. I'll go ahead and pass it along to my co-presenter, Melinda.
Hi, my name is Melinda Hyde. I'm an executive director in our unclaimed property compliance practice, and I work exclusively with healthcare providers. So this topic definitely is up my alley, kind of all day, every day, as Jason said. I'm also based out of our Indianapolis office and excited to get into the topic today.
Wonderful. Well, I kind of wanted to provide a brief roadmap of kind of today's discussion. First, just kind of wanted to provide a little bit of background for those of you who aren't familiar with us on who Kodiak is, and also a little bit about our unclaimed property practice. Next, I kind of wanted to lay a little bit of foundation framework for today's discussion to talk through what is unclaimed property and why should unclaimed property matter to your organization. Then we'll be diving into the meat and potatoes of the discussion, top 5 unclaimed property compliance trends. And then to wrap things up, you'll have heard the theme of us performing about 250 assessments over the last couple of years and some of the reoccurring themes that we've received from that. We wanted to provide you a little bit of a snapshot in terms of what that assessment typically looks like as an example, and then provide you all a framework for you all to maybe request a little bit more of a specific assessment for your organization as a takeaway from today's discussion. So I'm excited to dive in. A little bit about Kodiak. So Kodiak really provides a unique blend of functional knowledge, deep industry expertise, as well as applied technologies to provide value-based solutions across the healthcare industry. As you can kind of see on the map here, we currently work with about 2,300 hospitals, as well as about 375,000 practice-based physicians in all 50 states. Really, as a market leader in the space that really enables us to aggregate millions of transactions across our customer base on a daily basis to help drive effective solutions back to our customers. All of our solutions and data here at Kodiak are driven from kind of a single source of truth, what we call the Kodiak platform. That really allows us to analyze the data in different ways to come up with a wide array of comprehensive offerings that are each really deeply specialized. What it comes down to is really our goal is to help simplify the business of healthcare. Let the data drive the actual actionable insights, recommendations, and ROI. Obviously, the graphic here that you're seeing on the screen shows that we do a lot more in our ecosystem than just what we're here to talk about today, unclaimed property. So just kind of wanted to mention that if you see something that you're interested in and would like additional information, please don't hesitate to reach out. We'd be happy to set up some time to further discuss. Okay, wanted to dive in a little bit more into who our unclaimed property practice is before we kind of get into the content of today's discussion. So we're founded about 20 years ago, so been doing this for a long time. Believe it or not, there are 53 other individuals just like Melinda and myself who are exclusively focused on this topic all day, every day. This is what we live, breathe, and eat. And so have kind of created a very specialized solution to offer to the market. Obviously, what we had mentioned previously is that we're the largest healthcare unclaimed property advocate into the industry. We're an outsourced provider for about 2,100 healthcare organizations across the nation. Really, what makes us unique in the market is kind of twofold. One, we understand that unclaimed property is a headache. There's a lot of administrative, tedious, time-intensive activities that are involved, and similar to our kind of goal for across Kodiak to simplify the business of healthcare, we're in it to simplify the business of unclaimed property. Less is more when it comes to unclaimed property. We know that, and so if we can remove that unclaimed property headache from you, we've done our job right. Really, we do that through kind of a unique blend of both technologies as well as white gloved services. You can kind of think of us as like the TurboTax of unclaimed property, where it's all the benefits of a software. You've got the visibility and control of your data. But with that said, without having to do any of the kind of legwork and administrative stuff behind the scenes. And secondarily, what kind of makes us unique in the market is that we're very ROI driven. What I mean by that is most folks, when you think of unclaimed property, you're thinking about dollars that are going out the door. Really, what our goal is to kind of flip that on its head and make unclaimed property more into a profit center. We do that into a couple of different ways. One is identifying exemptions that you could take advantage of from a savings perspective, as well as what we call asset recovery, funds that are owed to your organization that we can kind of help bring in cash in the door for you all. We know cash is king, and that's of the utmost importance to organizations. We'll dive into those topics a little bit more as we lead into today's conversation, but just wanted to provide a little bit of background into who Kodiak is and what our unclaimed property practice is all about. Okay, why should you care about unclaimed property? So just as kind of a 1,000-foot overview of what unclaimed property is, really there are liabilities that your organization owes to other individuals or to other businesses. Common types of unclaimed property would be like on the disbursement side, outstanding checks. So it could be an outstanding vendor check, could be an outstanding refund check. Also accounts receivables, credit balances. So overpayments that are made on an account where funds could be owed back. That's considered unclaimed property. Sometimes we'll also see payroll checks to the extent your organization still cuts manual payroll checks. I know a lot of organizations are moving towards direct deposit, so maybe less of an area for you all. But those are kind of some of the common things that we see from an unclaimed property healthcare perspective in terms of the liabilities that organizations are collecting across their systems. All states have unclaimed property reporting requirements on an annual basis. So it's kind of acting like a tax in the fashion that it's very compliance driven on an annual basis. You need to send these funds to the state so they can act as custodians and handle the funds on your behalf so that you don't have to keep those funds on your books and records and into perpetuity. From a reporting standpoint, all funds are actually due to the owner's last known address. So if you've got a patient in Florida, those amounts are owed to the state of Florida. If you've got a vendor in Massachusetts, those amounts are owed to the state of Massachusetts. So it's based on the owner's last known address. To the extent you don't have that information available, then it's due to the second priority, which is the state of incorporation. So just kind of wanted to provide a little bit of background into what unclaimed property is. Really, the reason that we're all here today is most folks aren't specialized into unclaimed property. We know that organizations don't have a lot of time, effort, or dedicated resources to this area. It's not a core value for any organization. Unclaimed property can kind of be a little bit of a hot potato. As I was describing the types of unclaimed property liabilities, you probably noticed that it kind of lives everywhere within the organization, touches every aspect of the business, but it also lives nowhere at the same time. Kind of acts, like I mentioned, like a tax, but it's not really a tax. We see it sometimes in treasury, sometimes in revenue cycle, sometimes in accounts payable, finance. So just kind of depends within an organization where unclaimed property resides. But with that said, the reason we're all here today is that it used to be kind of unclaimed property is kind of a good consumer protection program where, hey, the states are doing their best to reunite funds back to the actual owners of the funds. They think just because individuals are reporting their taxes that maybe they'd be able to return those funds better than the original holder of those funds. So what is kind of morphed into over the last couple of years, instead of a consumer protection program, it's more of a revenue generator across the states. States have seen a significant increase in dollars that are coming in the door, and it's helping fulfill budget deficits, helping bring in more funds without having to raise taxes for those states. If you can believe it or not, some states' third largest source of unclaimed property is unclaimed property. Third largest source of revenue is unclaimed property. And so because of that fact, because of the revenue that they see coming in the door, and because of the low amount of claim rates across the states, generally speaking, the claim rate across the states probably averages around 5 to 10%. So if you can imagine 90 to 95% of all dollars that the states get, they get to essentially kind of keep in perpetuity and do whatever they like with it. So because of the increase in revenue, they're finding more ways to increase the enforcement of unclaimed property. And by doing that, they're continue to look at organizations who may be non-compliant, maybe haven't filed before. If they have filed, is it consistent? Are they reporting what we would expect them to report across the industry? So they're getting a little bit more invasive and reverse engineering the data to identify potential non-compliant holders and sending letters of non-compliance and even audit notices to organizations. Audits are pretty tedious and time intensive, and they can go back quite far. Generally speaking, unclaimed property state audits can go back 15 years, believe it or not, which is quite a bit farther than I would imagine most of your record retention provisions are within your organizations. Oftentimes, they'll hire third-party contingency fee auditors that are incentivized to look underneath every nook and cranny to identify funds. So they can be pretty invasive and cost-intensive. They're also increasing enforcements by auto-assessing penalties and interest on potential past due amounts. So if an amount should have been reported in a prior year, assessing maybe 12%, 10% annual interest on those properties. And we know that organizations are, obviously don't want that P&L impact. And oftentimes that penalty and interest can become more than the initial principal value of the property itself. And so those few things are kind of increasing the risks associated with unclaimed property and driving more organizations to be more proactive rather than reacting to an audit, more proactively addressing unclaimed property to make sure they shore up those compliance gaps. Also kind of going back, that's kind of the risk lens. From a reward lens, as I had mentioned, most folks see unclaimed property as a cost center, right? Dollars going out the door. Really, organizations probably aren't aware of the fact that this can be a significant savings generator across the organization, as well as helps increase cash. And the way that we look at that is kind of twofold. One, the industry exemptions, as I had mentioned, dollars that you had expected to have to report to the states that you now get to not report and take into the organization, as well as dollars that are owed to your organizations that are held by various government agencies. We call that asset recovery, that we can kind of help facilitate bringing that cash back into the door. So that's a couple different ways that we uniquely look at this to help turn unclaimed property from a cost center into a profit center. Really, to the genesis of today's discussions, as I'd kind of alluded to during the agenda, was that over the past couple of years, we've performed over 250 assessments across the healthcare industry. And through those assessments, we've been seeing some kind of reoccurring themes. And just as a part of who Kodiak is and kind of the specialty that we have in the industry, we always like to provide those industry benchmarks, maybe peer-to-peer analysis of what we're seeing across the industry, just to arm you all with the information and the tools and the resources to be able to make the decisions internally within your organizations of how unclaimed property should be addressed. So 5 reoccurring themes that we had seen. This slide kind of dictates common stuff that we see across the industry that organizations may have a gap in terms of their unclaimed property process. But we've really bolded the top 5 that we see day in and day out with these assessments of, every time we look at a health system, these are some of the common themes and trends that we're seeing as potential gaps that we'd like to address with you today and maybe take some actionable insights into how you could shore up those gaps. So without further ado, we're going to go into the next slide here and get into the top 5 unclaimed property compliance trends. And Melinda, I'm going to go ahead and pass it over to you for the first one.
Great. All right. We are going to start with the less fun topic, the risks that exist in the unclaimed property compliance. And Jason had mentioned those 250 assessments. Those are in addition to our current customer base. So we have quite a bit of experience. We've seen kind of underneath the hood, behind the curtain, if you will, with many different health systems of all sizes, geographic locations, specialties, and here are a few of the recurring themes. So we won't be going through every bullet point on this list, don't worry. But getting started with risk number 1, filing to the wrong state. So as Jason mentioned in his intro, unclaimed property is driven based on the state of payee. Oftentimes we see health systems reporting to a single state or perhaps only their state and a neighboring state. So I'm here in Indianapolis. It's quite common to see, just a 3-hospital health system reporting all property, all vendor checks, all patient refunds to one single state of Indiana. When in reality, you likely have reports due to dozens of states across the country. So when you're thinking through what does this risk exposure look like, a good lens to start with is where are people located? So let's kind of go through the list. Where are my patients located? Let's take the example of a Florida health system. Do you have a large snowbird population? Do you have a large tourist population, people coming down to the beaches or down to Disney? Like we said, those unclaimed property reports file the last known address of the patient. So if you have patients coming in to use your healthcare facilities who have a home base outside of your state, that unclaimed property needs to file them back home. Where do your employees live? Perhaps you're located kind of in a tri-state area where you have neighboring states. You'll have exposure there. And also your vendors. So, they might have a physical location in, let's say, Minnesota, but their billing address, it's handled by a third party located in Illinois. So your unclaimed property report will be due to the state of Illinois, not necessarily to the state of Minnesota for that property. So picking the right state and multiple states is a really important part, and looking at your unclaimed property risk exposure. We like to say that there are 54 jurisdictions that receive unclaimed property compliance reports. Your 50 states, the District of Columbia, Puerto Rico, Virgin Islands, and Guam. Yes, we mail physical reports to the Virgin Islands to help fulfill that unclaimed property reporting compliance requirement. All right, let's look back at our list of trends. Okay, no filing history or gaps in reporting. Let's talk about risk number 2. Okay, risk number 2, gaps in your reporting. Let's start with a basic one, years of reporting. So like Jason mentioned, this is an annual compliance function. Once you establish a reporting history with the state, it's best practice to continue that annual report year after year. So if you receive an audit notice, it's easy to pull that historic filing history that shows that you have been in compliance for consecutive years. We see audit notices be generated from a state's database where perhaps we heard from you 3 years ago, we've not heard from you in 3 years. Are you dissolved, out of business? Have you been acquired? Just further inquiries that you can avoid if you just keep up with that consistent filing history year over year. Another gap that we see commonly in unclaimed property reports are property types missing. So when we think about unclaimed property, a lot of times we think uncashed checks, right? Vendor checks, AP checks that get lost in the mail. They never get checked. They never get cashed. Those are the unclaimed property exposures. However, for a healthcare system, actually one of the largest sources of unclaimed property doesn't live in AP at all. There is no uncashed checks. They are active credit balances that live in the patient accounting system. So these are overpayments on patient accounts where a refund has never actually been processed yet. The state doesn't care that you've not gone through that administrative process of doing the refund. You are holding property that's not yours. Therefore, it is subject to unclaimed property reporting. So this can be pretty tricky for healthcare organizations to navigate because it requires coordination with a lot of different departments and a lot of investigation by the revenue cycle to determine, is this a true credit? Not just a false credit made by an adjustment or an incorrect posting or a double posting somewhere where there's not true overpaid dollars on an account. So a lot of manual research goes in account by account to determine, yes, this is a true credit balance. This really is owed. And then also determining, do we have name and address information to appropriately report this on our compliance reports? So a lot of times within the patient accounting system, it can be difficult to match up those pieces of data as they flow through the organization. So as you think about where does my unclaimed property lie in the health system, one of your first stops should be to the revenue cycle department and fleshing out, do we have robust data, names and addresses, and the ability to research whether this is a valid credit. I would also advise considering whether you have sunset or legacy systems. So we are seeing this frequently in the industry, conversions of technology. What happened to that wind down system? Is it still active? Can you get data out of it? Is it transferred? Are names and addresses preserved and transferred? So taking a look at what technology systems were in place as well as you're considering property types. Other types of property that are a little unusual could include health plan disbursements. So within a health care organization, we see individual health plans also administered. So being sure that they are part of the conversation for comprehensive reporting. We've even seen gift cards come across as a property type if your, in-hospital gift shop is managed by the hospital system and not by a third party. So all types of property within the healthcare industry, which keeps it fun for us. Another gap that we have identified in our assessment would be gaps in entities included. So a really easy exercise would be just to grab an org chart of your health system. Obviously we have each acute hospital. Those are easy to investigate, but be sure that you're also capturing professional physicians' practices, urgent care clinics, surgery centers, imaging, health plans, all of the ancillary services and locations are being captured as well. And finally, gaps in disbursement accounts. So working with your treasury department to be sure you have a comprehensive list of all disbursement accounts. A lot of healthcare or a lot of organizations in general maintain different bank accounts, banking relationships for different functions. Again, there could be a sunset situation where you had a previously active bank account, but you're no longer cutting checks out of that. Is that data still accessible and being included and analyzed for unclaimed property? So several different risks for gaps, making sure you're taking a close look to fill those and keep your compliance in check. And our last risk, unconsolidated filing. We recommend that you file unclaimed property compliance reports at the parent level to be sure that each entity is included in your compliance history and filings. Like I mentioned before, these could be all of your ancillary, physicians' practices, urgent cares, surgery centers, et cetera, et cetera. It's also important to consider whether you've had recent acquisitions, divestitures, how those transactions can affect your filing and the included entities, and considering whether there might be some strategies about filing on a consolidated or other basis if you are under audit. And we would be happy to discuss any extra risks in that particular area. I'm going to turn it back over to Jason to talk about the fun things now, the rewards.
All right. So to kind of round off the top 5 unclaimed property trends, the last 2 here are going to be more of the fun side of unclaimed property. So first, we'll get into exemption opportunities. Typically, when we're doing these assessments, one of the most common reoccurring themes that we see is that organizations, believe it or not, are actually over-reporting amounts to the state. They're over-reporting amounts that would have qualified for statutory exemption. So think of it kind of going back to the TurboTax example. When you're filing your personal taxes, there's some deductions, credits, exemptions that you could take advantage of. Thankfully, there are similar opportunities in the unclaimed property industry, specifically within healthcare. There's about 100 different opportunities to take advantage of. And not every state has unclaimed property exemptions available. The states that do each have kind of their own unique, multifaceted requirements that help kind of determine eligibility. If you're looking at the chart here to the right, those are just some of the different data fields that would kind of go into that analysis to identify. But thankfully, there's a couple of different types of common exemptions to take advantage of. I'll just kind of go over 3 examples. One would be a recoupment exemption. So this is kind of the reverse of a payer denying for timely filing, where a provider, if they receive a payment for a payer and the payer doesn't recoup their dollars after a certain period of time, the law says that the provider not only doesn't have to send that in as unclaimed property, but they didn't need to send the refund to begin. Another kind of common example for industry exemption would be business to business. There are certain states that just basically say, in the normal course of business, if there are unsettled amounts, those would have typically been resolved throughout the ordinary course, and those don't need to be sent to the state as unclaimed property. The third and final kind of example that I'll share today is a de minimis exemption. Basically what that says is dollars under a certain threshold. They basically say it's going to cost more to send it in as unclaimed property than the property was initially valued anyways. And so dollars under a certain threshold aren't necessarily always reportable. What we like to say is we want you to be compliant, but not overly compliant. And this is really the bread and butter of Kodiak services, of what we do. Yeah, we take over the administrative hassle of the milestones and activities to get the reports out. But more importantly, we want to turn this into a profit center and identify areas that we can add value. And this is certainly one of the technologies that we've got in place, kind of systematically identify these amounts on behalf of our customers to help maximize the savings, minimize the over-reporting, and again, turn this into a profit center. Oftentimes the exemptions that we identify more than cover the total costs of compliance. So certainly don't want you to miss out on that opportunity. Kind of the last reward that we wanted to talk through is asset recovery. So for those of you who may not be familiar with asset recovery, basically throughout this entire discussion, we've primarily been focusing on reporting to the states, annual compliance function. Kind of the opposite of that is asset recovery. These are amounts that are actually owed to your organization that are held in various different government sources that are owed to you all that you may not be aware of. And generally speaking, what we say to organizations is once you've established that reporting profile, it's good to take a look under the hood to see what amounts might be owed to you. Most folks are probably most familiar with unclaimed property residing at the state side, because that's oftentimes where you all are reporting dollars, is unclaimed properties that are held by the states. We certainly encourage you to look at the state side, but just so you're aware, there are also unclaimed properties that are held more at the local or federal levels as well. Unfortunately, those government agencies don't have the same reporting obligations that maybe your organization does. And so oftentimes those dollars that are at the local municipality level, cities, counties, courts, federal agencies, Department of Treasury, they don't have those same reporting obligations. So those dollars just kind of live and die at that level. And so most of those dollars are more of like the rebates, licensees, property tax refunds, corporate tax refunds, maybe not necessarily as much volume of unclaimed property, but certainly higher dollar value. And so those are kind of the common areas of unclaimed property that we encourage you to search for your organization. Thankfully, here at Kodiak, because we're an outsourced provider to 2,100 healthcare organizations, we're also able to tap into our customer base to identify amounts that may be owed to you all by one of our current customers. So we do the entire healthcare vertical, including medical device manufacturers and technology organizations. And oftentimes we're able to help reunite funds between our customers before the achievement process begins. Instead of manually looking at that, Kodiak kind of takes a little bit different of approach. It's very technology based, where we intake your organization's entity listings to do fuzzy matching algorithms to identify potential matches. As you can probably understand, the amount of different name variations, anomalies, misspellings that are held by the various government agencies can be significant. And so we just want to make sure that we're not leaving any stone unturned and casting a wide net to make sure nothing's falling through the cracks. We take a little bit more of an automated approach to doing that. And finally, obviously, the states are willing to accept a lot of unclaimed property, but a little bit tougher to have those funds leave and send them back. And so oftentimes organizations can say that this is a tough process, that it's very kind of tedious and time intensive. The government agencies can ask for quite a bit of documentation to help support and prove out the claim. Luckily, because Kodiak's been doing this for over 20 years on behalf, over 2,000 entities, they're familiar with our names. We've built relationships. And so oftentimes we can kind of help expedite that process, speed to claim, accelerate the process to get cash in the door. Kodiak can, generally speaking, take on about 97% of the work. It's a quick ROI, easy onboarding. Customers can expect to, generally speaking, begin to receive checks within the first 30 to 90 days post-contract execution. So a very value-add arrangement that we can kind of help your organization. With that said, Melinda, I'm going to go ahead and pass it back to you to wrap us up.
Great. You've heard the word assessment several times today. We would love to do one for your organization. So here's a quick snapshot of what you can expect to receive if we do one of these assessments on your behalf. We have the asset recovery, which Jason just talked about. That's money coming to you. And we also make notes about your annual compliance and reporting history. So what has your organization been doing in the past? Where might there be some risk areas or potential for improvement? So we love this approach to start the conversation. It's a great one-pager that you can circulate internally to make sure the right stakeholders are involved and invited to the conversation. So if you'd like to explore what your assessment might look like, reach out to us. We'd love to connect.
Just want to say a quick thanks, everybody, for joining us today. We really appreciate your time. And with that said, Matthew, we'll go ahead and turn it back over to you.
Jason and Melinda, thank you so much for your insights today and taking our audience members on the journey as we explore unclaimed property compliance trends. We really appreciate all of your time. For our audience members, as we wind things down here, a couple of quick notes. If you haven't downloaded a copy of the slides, you still have a few seconds to do so. Also, if you'd like to connect with the team on LinkedIn, you'll find those at your fingertips as well. We do have a post-event evaluation. It's going to open up in a new window. It's a great opportunity for you to let the team know what you thought about today's session, share any final questions you have, or let us know how we can assist you moving forward. So thank you in advance for your insight there. I want to take a moment, thank all of you for investing the most precious of commodities, and that is your time. We hope you feel it was well spent with us, and we look forward to you joining us on an upcoming broadcast. Have a great day.